Hey friends, welcome to Why Did We Start This with Penny and Jonathan, a daily reset helping exhausted business owners stop guessing and build real financial systems so you can finally reclaim your paycheck, your time, and your business. Let's dive in.
Woohoo! Okay, so today is Thursday, and we are going to be talking about a real problem from a Reddit user. Real.
R-E-A-L, not a R-E-E-L.
Right.
I don't fix those.
R-E-A-L.
Okay.
So I've got that pulled up. Penny's going to be answering that. But plus, stick around to the end, and in the end, we're going to talk about 3 things to know. 3 things, not 2. 3 things to know before you pay yourself. So
before,
it's going to be good.
Maybe just in the middle. I guess most people are past. You never know. Yeah.
3 things to know before you pay yourself.
Yeah.
Okay,
let's go.
So let's dive in.
3 things.
Here we go. So this was an interesting story. And I think a lot of people say this. They say, how can I afford to pay myself when first starting? So the context is a new founder is trying to set up their legal structure, LLC versus S-Corp, but is stuck on a more fundamental problem. They have been told they have to run payroll for themselves, but they have no money coming in yet. This is his direct quote. What I am struggling with is figuring out how I'm supposed to pay myself, and my company has no revenue upon starting up. I do not see my small business being profitable until at least a couple months in.
This is great. This is good stuff. Okay, so I'm gonna correct you, maybe, or realign. You said they're trying to set up their legal structure, LLC versus S-Corp, and that's not actually a thing. So remember, an LLC is a legal entity, and S-Corp is a tax structure. Okay, 2 different things. You can have an LLC that is an S-Corp, or you can have an LLC that is not an S-Corp, that is a sole proprietorship. Okay, so first of all, that thing.
It's not one versus the other.
It's not one versus the other. Nope. So for example, I'm going to give you our example. We filed an LLC as soon as we started this business. And because of the nature of our business, we needed to make sure that we had the legal structure in place. And we have to carry errors and omissions insurance. Actually, we don't. We do because I think it's the right thing to do. And then a year later, or I don't know how long, then we elected S-Corp status. So we filed our first 2 business tax returns as sole proprietorships, and then elected S-Corp status in our 3rd year in business. So now we're still an LLC. However, now we are being taxed as an S-Corp. Okay, so we got that out of the way. I hope that helps somebody because it's very confusing.
It is confusing. And I think
Is it clear as mud now?
No, the thing that helped me was when you explained it like that. Like there's LLC, which is
and by the way, there are different types of legal entities. An LLC, an LLP. There's an LP.
Right. There's a difference between.
That's just the one we hear.
Right. There's a difference between legal entity and tax structure, and that I think is what confuses most people. Yes. So,
and you have to get an attorney and an accountant all at the same time.
Yes, both are important, and that's when we talk about here, like getting professionals on your side.
Yeah. Okay. So first of all, this guy was confused about that. So we got that worked out first. Okay. And he said, I don't see my small business being profitable until at least a couple months in. So here's what I would tell.
Hey, great. 2 months in, profitable. I think that's amazing.
I think so.
Anyway.
I started my business, and God was so good when he told us to start this business. I was like, well, let's do that. At the time, you had a nice, cushy job that was paying most of our bills, so it wasn't that big of a face step. And I started this business and replaced my salary in 60 days after taxes. Now, it's not that impressive because my salary wasn't very big. And so, I mean, I play it down. I downplay it, but it's pretty big. So, but it still took a couple of months to do that, even for us in this industry. And this is a pretty easy industry to replace like a bookkeeping salary. So, So yeah, 2 months in, profitable is great. Here's the deal. There's no money. You can't pay yourself without money. So, so you have to have a plan. And somebody told us, there's a couple of different paths you can take to entrepreneurship. You can take the path where you work a full-time job and then you start something in the evenings and you work that thing in the evenings until it builds to where you can quit your job, your 9 to 5, and just do entrepreneurship. There is rarely ever a moment where somebody's not actually taking a risk. That's the name of the game in entrepreneurship. So there's not usually the moment where you're like, okay, great. I have all these clients lined up to replace my salary 100%. I haven't met anybody. If you're out there, please send me a message and tell me how beautifully perfect the launch to entrepreneurship went for you. The rest of us, however, I'm talking to the rest of us, how it did not go as beautifully as possible. So I would say, number one, know what you have to, something has to pay the bills. So you have to be realistic with yourself. When I get this kind of question, like, I'm really good at what I do, but I can't just dig up money out of nowhere. Now, there's a couple of different things. You can get like SBA loans to start a business. SBA loans usually want the credit and the income of the person borrowing it, though. So if you quit your job, then start your business, it's going to be hard to get that SBA loan. SBA loans. Now, once you're in business for a couple of years and can show profit for a couple of years, then you can get SBA loans easier. And I am not a loan expert. So we will have a loan expert on here at some point and talk about these things. So you can do that. And you can plan to make sure that you have a little bit in there to pay that salary. Okay, so that's one way. But if you're just a small, I don't know what he started. So that's the other thing. I don't know what he started. If he started a solopreneurship or if he started a service-based business like mine, or if he started, let's say, he opened up a Chick-fil-A. That's something different. Okay, so there's a different ramp to paying yourself for all different kinds of businesses. It's probably not Chick-fil-A. I think they're profitable day one.
No, it doesn't sound like that.
So you need to know what you need personally. You need to know what the business needs personally. One of the questions that he asked was about trying to set up his legal structure in S-Corp. And didn't you say this, that he was told?
So, yeah, it says, I think this is important. It says that he's been told that he has to run payroll for themselves, but they have no money coming in yet.
Okay, so let me break this down. Because I just talked to a client yesterday that was told the same thing. And
he's starting, the client that you talked to yesterday is just not starting. A client yet, but he's just starting. He's starting his business and wanting some advice.
Yes. So he told me, he said, I've called a few other places and they said to start an S-Corp. And he said, but you're telling me not to. And so my EA, Mike, had already had a conversation with him and told him, let's hold off on that. And he goes, so why? He goes, I trust you and Mike. You guys are way smarter than the other people I've talked to. And he goes, but I need to understand why they're telling me that and why you're telling me this. And I said, well, here's the deal. I'm going to break it down really, like,
just be frank.
I'm just going to be honest. Accounting is a business, and they will tell you whatever to get you to have the higher ticket price. So the other places that he had called were big, huge firms, and they were telling him to go ahead and do the S-Corp because they charge twice as much to file an S-Corp tax return than they do to file a sole proprietorship tax return because there's more documents.
Sure.
So, that's like going to the restaurant and being like, would you like appetizers? Yes, you would. Can I interest you in a bottle of wine?
Well, it's like when you go to a restaurant, and I do this all the time, and it drives Penny crazy and the rest of my family crazy. But I always ask the waiters or waitress what they
seriously
recommend.
Yeah.
And sometimes I just do it for fun, but sometimes I get a good recommendation. And sometimes they just point to the most expensive thing on the menu.
Yes.
Or what the cook has told them to recommend that day. So,
it's not always in your best interest.
no, it's not always in your best interest. So sometimes that's the answer you get when you go to a CPA's office is, sure, yeah, file your S-Corp because that means that we're going to charge you more.
We came across some people that we know that actually had jumped from, they went ahead and skipped the sole proprietorship, S-Corp. They went to a C-Corp, which is a whole entire different level of paperwork and documentation and tax return.
Their business, they went to a C-Corp.
Yeah, I mean, I don't think they had $50,000 of revenue. It was ridiculous. And I was like, you need to go get that taken care of.
Their thought was, it's cheaper. For some reason, it was cheaper to do it now than do it later.
It's not.
We were like, what?
That's a lie.
No, this is not good.
So here's the deal. An S-Corp, when you elect S-Corp status, the IRS says that you have to pay yourself a reasonable salary. And usually what a reasonable salary means is that, so as the owner of our business, I have to pay myself enough money that if I were not here doing it, I could pay someone else to do what I do, to spend the hours that I spend on this business. Okay, so that's the IRS rule. Now you can see the problem. If you're starting up a business and you don't have the cash to pay, that you could pay somebody. So I'm just going to use $100,000 in this instance. I mean, I don't know where he lives, what he does. I'm just going to throw that. It's just an easy number. So let's say it would cost him $100,000 to go hire somebody else to do what he does. Well, he doesn't have that $100,000 today. Owners are willing to make sacrifices that employees are not willing to make. And so there's no way in the universe he could go hire somebody and be like, hey, I need you to come work in here this many hours a day, and I need you to put your blood, sweat, and tears in. And someday soon we're going to be profitable, and then you're going to get some money. There's nobody that will work in those conditions. It's not. Right. It's not like that.
Right.
But owners will. And so that's why it's dumb to elect an S-Corp right away unless you have that revenue coming in right away. Okay, right. So there is some businesses that like they open the door and that money's there right away.
Right.
That's a different thing. But if you're going to build a business and it's going to take a few months for it to be profitable, then you might as well wait and elect S-Corp later. But S-Corp status is different on every single person's And I hear, Mike, whenever we meet with people, we take their whole entire tax picture into play before we make that decision or make that recommendation. So somebody made a recommendation to my client and without even knowing anything about him. And I think that's really dumb. And you have the extra expense of the tax return, and you have the extra expense of running payroll. Running payroll is not free. It's not cheap. And also, accounting offices do it, and they would love to sell that to you.
Yeah. So there you go. Let's jump into the 3 things to know before you pay yourself, because I think this also just helps answer that question that this business owner is asking with 3 simple things to know before you pay yourself. So here are 3 things to know before you pay yourself. 3 things to know.
All right. Here we go. Ready? Number 1, an LLC does not create a paycheck. I think I just talked this to death, but your legal structure matters. It doesn't automatically put money in the bank. So you have to pay yourself with actual money. There you go. The second thing is to create a personal, if you can, I'm hoping this guy could, create a personal runway and a business runway. So one of the most important things you can do as a person is know your personal budget, know what it takes to keep this house afloat on a monthly basis, and then create a personal runway. So it's really great if you can. And I mean, we had a little bit of a runway. Our story is that my position was eliminated. It was totally fine. A few months later, Jonathan's position was eliminated at his job, and then we were trying to replace 2 salaries, and we've done it.
Yeah.
But it's, I'm not going to lie to you, it has not been a smooth road. It was like, it was easy.
Right.
No big deal.
It was the grace of God.
And so you have to, know that, so create a personal runway if you can, and a business runway if you can. And the rule of thumb is 3 to 6 months of expenses in the bank for both of those. So for your personal, have 3 to 6 months in the bank that's available, and 3 to 6 months in the business.
Yeah. And I think like this is something we talk to our clients about all the time. Not necessarily about the runway, but about your personal budget and your business budget, because we're talking to clients about how to pay themselves. Well, the first thing you need to know when you're thinking about paying yourselves is how much do you need? How much do you need to live on? How much does the business actually need to pay you? So,
and resist the urge. This is a bonus. Resist the urge, business owner, because once you start a business, money starts coming through the account that you've never seen before because you were used to being on a W-2. So resist the urge to increase your lifestyle right away. Make sure that you build your business and then build your lifestyle. And it's not the other way around. Okay.
Yeah, that's really good.
We should do a whole segment on that one.
Yeah.
And then number 3 is just decide the trigger before the money comes in. So instead of running on feelings, decide, okay, I'm going to get to where my business is profitable for 3 months in a row. And this is my favorite way to pay people, if you can do it, is to open up that first 3 months and then to have nice, beautiful, clean books that tell us the net income. We look at that net income, and then we decide from that net income from the last quarter what we could start to pay ourselves. And then that really becomes a good, consistent basis to run off of. And then you've got the squishiness of that first 3 quarters of money to fall back on.
Yeah. Yeah. I think that's good. Yeah. Set it up before.
Yeah.
Right? Like set it up before. And start thinking through how those buckets are going to be set up.
And again, it never goes as it's planned. This is entrepreneurship. This is risk taking. So I promise you, it is not without its bumps. But if you can operate on actual data as opposed to feelings, you're going to win every time.
Yeah. Yeah. All right. Thank you guys for joining us today. Join us tomorrow for Freedom Friday, and reach out on Penny's Facebook, LinkedIn, or Instagram. We'd love to hear from you. DM
I want
us
you to DM
or comment.
me. Tell me when the first time you were able to pay yourself from your business, if you've been able to do that, and how did it feel?
Yep. All right. See you tomorrow.